Ticker symbol SCHD, or the Schwab US Dividend Equity ETF, my #1 largest position as far as dividend growth ETFs across my entire 7-figure portfolio. Not only just as of recently announced a massive year-over-year third quarter dividend increase, but also as of today also announced that SCHD is going to undergo an ultra bullish 3-for-1 share split, which I think is going to make this ETF soar to new all-time highs because of this reason alone. Now, whether you hold one share of this ETF, hold 1,000 shares, or have ever thought about holding onto it, make sure to stick around, drop a link down below because we're going to go through all this. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to back things up for a second, just as of yesterday, September 25th, SCHD did announce their September dividend to be 75.45 cents, which is a massive increase, basically 10 cents more than the previous dividend for the third quarter of last year. Now, this was extremely exciting to everyone across the community. There's a lot of dividend investors that hold on to SCHD, and for me personally, with around 700 shares, more or less, this is giving me a lot more income than I was previously getting paid last year. Not to mention, this ETF just once again proved itself that it's going to keep raising the dividends consistently, or at least it's done so historically. Now, this most recent dividend is a 15.3% change from the previous year, which again, at least speaking for myself personally as a long-term SCHD ETF holder, I'd be happy with them raising the dividends a consistent 6, 7, 8, 9, 10% year over year. But as of recently, we've seen a 15.3% increase year over year. We've seen a 24% increase, a 2.4, a 5.5, a 2.8. So if we were to average things out over the past 2 years or so, we're definitely within a very, very healthy range. But now, to get into the point of this video, I wanted to touch on the fact that SCHD did just announce as of today that effective after markets close on October 10th, 2024, which is very soon, that's just a few days from now, this ETF will undergo a 3-for-1 share split. The ETF share split will apply to shareholders of record as of the close of markets of October 9th, 2024. So as long as you're holding on to shares of SCHD, whatever shares you hold on to, as of October 9th, 2024, you're going to have those shares split 3 ways. Now, it then says shares will begin trading at their post-split price on October 11th, 2024. Forward share splits increase the number of shares outstanding and decrease the net asset value, or NAV, per share. The share splits will not change the total value of a shareholder's investment. Now, for those of you guys that are a little bit confused about stock splits, I know even though it's pretty simple, it can be kind of confusing. I remember years ago, I was holding on to shares of Apple stock. I had quite a bit of shares, and I remember Apple announced a stock split. And at first, I was honestly kind of confused, although it's very, very simple, so listen in. It basically is this: a stock split is a corporate action in which a company increases the number of shares of its outstanding shares by dividing each share into multiple shares, thereby reducing the price per share. Now, it then says some key takeaways. This is going to be very important, so listen closely. It says a stock split increases the number of shares outstanding by splitting each existing share into more shares. So if there's a certain stock, let's say that's trading at $10 per share, and there's a 2-for-1 stock split, then for every single share of that $10 stock that you previously owned, you would now own 2 shares at $5 per share. The stock price is adjusted down proportionally when a split occurs, so market capitalization stays the same. Splits make stocks more affordable and can potentially increase liquidity, which we're going to talk about that here in a second. It also says splits do not directly change the fundamental or intrinsic value of a company. And lastly, investors should evaluate stock splits in the context of their investment goals and overall strategy. Now, for the context of SCHD, because of course this is exactly why you clicked on this video, because SCHD is currently trading at $83.37 per share. This means that in theory, if SCHD went up to $84 per share, and if the stock split happened the next day, the new shares of SCHD would be $28 per share, and you would own 3 of them. So again, to recap, if you owned 1 share of SCHD as of today, let's say it's at $84 per share, after the stock split, you're going to divide the price by 3 and times the shares by 3. So you're now going to have 3 shares at $28 each per share. Now, why is this important? Why is this impactful? Like I said, I held on to Apple shares before the split, and after the split, I've held on to plenty of different single stocks and ETFs that have split over time. And I'll tell you one thing's for certain, although it doesn't really change anything, you're basically taking a cookie or a pie or a pizza, you're dividing it up, but the item basically remains the same. But even though that's the case, I think there's definitely something emotionally or mentally that triggers investors to want to buy more shares of a stock or ETF, especially if it's perceived as cheaper. And that's exactly what's happened with many different holdings in my portfolio over the years. After stock splits, the price will of course go down, but not for long. They always seem to go up afterwards. So for me personally, if I'm currently holding on to 700 shares more or less of SCHD, and if I have an average cost basis of around $70 or $75 per share, that means that post-split, I'm going to have somewhere around 2,100 shares of SCHD. And each share will probably be worth something of around $25 to $30 depending on where SCHD is trading after the split. But that also means that my cost basis for SCHD is going to be probably around the $20 to $25 range per share, which is going to feel very, very good. Now remember, the dividend yield is not going to change. That's another big question. A lot of investors are saying, well, if the shares are going to be cheaper, does that mean that the 3.33% dividend yield is going to change whatsoever? And it 100% is not. Once again, you're basically just taking the price of SCHD, whatever it's trading at during record date, you're dividing it by 3 and giving yourself 3 times more shares. It's as simple as that. So you don't have to worry about your portfolio losing dividends or all of a sudden realizing the fact that SCHD's dividend yield is going to be cut by 3. It's none of those sorts. But the reality is, and tell me what you guys think about this down below, if SCHD tomorrow was trading at $25 or $30 per share, let's just say, and let's say you are an investor like myself that buys a share or two of this ETF, or at least has bought a share of this ETF more or less every single trading day. If this ETF costs $20 to $25 to maybe $30 per share, as of tomorrow, let's just say, theoretically speaking, and if you had a cash balance of say $100 or $200 to use in the market for your portfolio, please tell me if you probably would buy a few more shares of this ETF just because it is a little bit cheaper, because I personally know that I would. So for that reason, I think there's going to be a huge population of retail investors that might before only buy a share of SCHD here and there, because let's be real here, it is kind of expensive at almost $80 to $100 per share. But once this ETF trades at $25 or $35 per share, I think a ton more retail investors that might have a smaller amount of cash balance in their portfolio are going to get really excited and buy a lot more shares of this ETF, which, like I said earlier, I think is going to have the new price explode. So all in all, my takeaway is that this has been an amazing week for SCHD and for holders of this ETF. Not only did we have a 15% increase year over year as far as the Q3 dividend, which again, for some investors out there, especially if you're holding on to maybe hundreds or thousands of shares, is a substantial amount of increase. But on top of that, we also now have this crazy news that they're going to go through a 3-for-1 share split, which is potentially going to increase a lot more liquidity. And I think personally is going to make the sentiment extremely bullish for this ETF, because most simply said, for every $100 now that you have in your portfolio for cash balance, you're now quote unquote going to be able to buy a lot more SCHD, even though it's basically the same thing as before. So now that we went through SCHD's share split, the 3-for-1 that's going to happen at the close of October 10th, I lastly want to hear from you guys down below. Is this going to be bullish? Is this bearish? Let me know your honest thoughts in the comments. And also let me know what you guys think about SCHD moving forward. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by. And if you are interested in investing, make sure to check out these recent videos I posted right here.